Hi, Paul.
Hey guys. So just briefly speaking, what is YEL Finance and what we're building? So we are building a multi-chain yield enhancement and aggregation platform to help projects raise multi-chain liquidity while providing a good investment opportunities for the investors and maximizing their yields and whatever they're earning now. So we're kind of combination from super large pools with low APRs and small pools with super high APRs. In the meantime, covered with automated farming strategies to ensure people are getting maximum of the possible APRs they can. So if we briefly cover like how this loop would be working, is that we are open for any application from any project who wants to jumpstart their liquidity or just get some extra liquidity. We're operating on 4 chains, so we would review the application, do some due diligence. If everything is fine, we'll list the project in the Spectre section, what will give him some eyes on. We'll also cover it with marketing materials, cross-sharing, and setting up the farm for the project, basically. And we establish like minimum desired liquidity that should be collected through YEL platform, and the projects are charged performance fees for doing that, and those performance fees are used later to cover all the incentivization of the pools, of the large pools. So we're basically attracting investors and daily active users to our platform through incentivization of well-known and large farms and pools, and in the meantime offering them small investment opportunities but with super interesting APRs of young projects. And all of that is covered with the automated farming strategies. So the automated farming strategies would be working within the 3 different risk
Cool.
levels. Yeah.
Before you dive deeper into the product,
Sure.
give me a little bit about your background.
So I've been in crypto for like 5 years probably, and I actually run a development agency, and we have been building many products in crypto, like crypto wallets, hardware wallets, mobile wallets, centralized exchanges, and many other products. And I just got personally really inspired by DeFi space and the opportunities that it can bring basically to the market and to people. So we've started to build YEL Finance in January this year, basically, and we're live now. And we are a team of around 8 developers, 2 designers, few marketers, 3 business developers, community managers, QA testers, and basically me.
Got you. Okay. So why did you go with this product? Why is this the particular product that you wanted to build?
Well, there are plenty of DEXs, basically, which offer various different opportunities in terms of trading, swaps, providing liquidity. And there are a lot of different farms which give users some extra incentivization for their liquidity. However, there is a huge gap and a problem for projects that are just starting, and projects who basically just just started their operational activity, and they lack trading volumes, they lack price stability, they lack liquidity, and it's super hard for them to actually raise it, because there is 2 options. You have to be backed by some Binance Labs or angel investors or hedge funds, or alternatively, you should be, like a side project of something big and huge. Like otherwise, I mean, just regular developers who have an amazing idea, interesting token economics, and can actually contribute to DeFi space. They really lack the exposure, the awareness, and there is no much opportunities how they can actually achieve that. Because getting listed in the Pancake Swap, I mean, you can participate in the community farms, but you have to bid like 200, 300K. I mean, like that's not something you expect from the young project to spend money on, right? As well as like marketing expenses and collaborations. I mean, it's almost impossible to get mentioned by Sushi Swap or get into their IDO programs, like MISO programs, because they just favor their friends basically, and that's fine. I mean, but in this market, we don't have any boost now for actually cool projects who deserve eyes of the investors. However, are built by genius individuals and not like hedge funds. So we are trying to solve this problem, as well as some projects just run on one chain. What I think, it's not about the actual chain. Like it's not about it's not like I'm saying like Polygon is bad or Binance chain is bad. No, I'm just saying that any project that has been run on one chain can explore the opportunities on multiple chains, and by doing so it will also create way more price dynamics and trading volumes and arbitrage opportunities for the market, as well as exploring new opportunities and collaborations on different chains and gaining more token holders. So that's why what is our second mission basically is to help projects to actually become more multi-chain and become more global.
In terms of like finding liquidity and pricing for their tokens, isn't that kind of the role of the community of that particular project? That the people that really believe in it are going to start to contribute, whether by providing liquidity, whether by adding value, marketing wise or community building wise. So, like, do you replace that community? I mean, I guess you support it. Like, do you understand what I'm trying to ask?
Yeah, for sure. It's not actually about like replacing the community. It's more kind of helping this community and the project to actually jumpstart their trading volumes, jumpstart their liquidity, and raise awareness about them. I mean, like, put it this way: if you came up with some amazing idea and you actually can bring a lot of benefits and contribution to the DeFi space, and you have developed a really cool protocol, but I mean, no one's gonna use it because no one knows about it, right? So you have to create, like Twitter account. You have to create community in Discord or Telegram. Then you have to fulfill this community. You need some marketing expenses. You need some moderators. You need some business developers. You need and all of that actually costs pretty much a lot of money in the long term. I mean, like if you, I can tell you like that we spent over $500,000 on yield enhancement platform within this 8 months, and it's something that our company covers from our own funds, because we are live just 10 days, and I understand that not all projects can actually afford that, and for some projects it's super important to actually get some partnership and get some opportunity to show themselves, right? And that's what we're trying to achieve.
Yeah, I understand. I mean, what I'm trying to say is that a lot of these projects that exist right now, whether it be Yearn Finance or Sushi Swap or whatever it is people are using these days, they didn't have a YEL finance to help them bootstrap liquidity, right? Like sushi, for example, they did it internally, right? They would give out the sushi rewards in order to, bootstrap the decks essentially. So like you're coming in to help bootstrap projects with their liquidity, but um, couldn't they just do that by just creating their own farm? You know what I mean? Just having their own, yield farm essentially, and then like why do they need another one on top of it?
Yeah, answering your question. So, such giants like Yearn Finance and Sushi, I mean, those are the first comers. And these guys were basically at the very beginning of the DeFi market. And, let's put it this way, Sushi from originally, it was just a fork of Uniswap, right? But they just found the way how to bring extra value, how to add some more features, how to actually explore the potential of the DeFi space. And Uniswap didn't go that far in terms of different opportunities and ecosystem that Sushi created in contrast. And regarding just a personal farm, I mean, put it this way, if your community is like 1,000 people, for example, and you launch a token and you create a farm, you have to continue growing, you have to continue attracting people. You need a lot of resources to spend on marketing, on business development, as I said, and get some noticeability for your product, right? Because creating, just a farm, and it's something that can help you retain the community for a month or two. However, if there is no economical value behind this farm, I mean, it won't work, right? And also, there is a lot of effort the project should put into that to make sure that they're growing, right? Because there is also a problem economically wise when you have a few investors who make, like 90% of your farm. It means that they're farming all the rewards, and hence you're risking of a huge dump one day because it's not spread across the people, right? So and it's not I'm not trying to say that people would be dumping your token 100%. No, for sure not. But um, people have different situations in their life. Someone have to pay bills, someone have to leverage his position, someone has found something more interesting in terms of product to invest in. So I mean, there will definitely be a sell pressure for your tokens if you just set up a farm. And we are kind of a launch pad for those projects and products uh, who doesn't require any deposits. We don't ask for any deposits, we don't ask for any upfront payments, we don't have any super complicated legal barriers. I mean, we are just trying to use our resources and whatever we will aggregate during the time to help other projects deliver what they want to deliver faster and in a better way. So I would say that's like the main difference. And yeah, and if you want, we can pass to like YEL token economics and how all of that would be working.
Yeah, because I would see you talk about sell pressure. I would assume YEL has a similar issue. It's not like magically nobody's going to sell the YEL token. So how do you prevent that from happening and then actually go ahead and provide that support to the projects that are using your platform?
Yeah, so basically we have several instruments how to incentivize people to actually buy YEL and maintain it rather than sell. So first of all all the fees generated by the protocols and the Spectre section will be allocated for enhancement rewards. So anytime any project gathers the liquidity through us, they will be subject to a performance fee paid in YEL tokens. So the project has to go to the market, buy YEL tokens, create some buy pressure for it, and pay the fees in YEL tokens. Those fees will be like allocated to the fund, basically. On top of that, the automated farming strategies that provide people with, like quick and simple way of management of their assets, also generate fees and pay all the profits in YEL. So let's say you have entered the medium risk automated farming strategy with FTM, as a single asset, and you deposited 10K USD worth of FTM in FTM. The protocol will basically evaluate all the farms and all the possibilities that are in the strategy, check for the liquidity depths, check for the trading volumes, check for the rewards and like APRs, is there auto compounding or there is not, and make the best decision where to allocate the funds for the best returns on the investment. And the protocol does it constantly, so it's possible that one day you would be farming FTM VACA LPs, for example. You would be farming VACA tokens whilst protocol would be staking FTM VACA LPs. Next day you might be farming BOO tokens, and one the protocol would be staking FTM and BOO LPs. So in 2-3 days, it's possible that Equilibrium, that's the name of the protocol, will change the position several times and earn profits in different tokens. However, every time the profits have to be paid to the user, the protocol will exchange those tokens to YEL and pay all the profits in YEL tokens, hence creating like pretty big demand pressure and pretty big buy pressure for YEL token. This protocol will also charge fees as similar to performance fee, and pay back the initial deposit to the user, profits in YEL tokens, and collect the fee. The fee will be allocated to the fund as well, and all the fees that platform generates will be allocated for the enhanced pools. And this is how we organically create the buy pressure for YEL token, and how we motivate people not to actually sell is a simple governance model, because to vote you need YEL tokens. YEL tokens will be your voting powers. So any project listed in Spectre section can join YEL enhanced pools. So let's say Gabriel, creators DAO, create a farm in Spectre section, and you guys want to bring and deliver some more value to your liquidity providers. So you would go to your community and say like, hey guys, there is a proposal for moving creators pool up in the list to join the YEL enhanced pools. Can you please participate in the votings? What means that many of your members would have to go to the market, buy YEL tokens, participate in the voting to make sure you guys join the YEL enhanced pools. And basically that's what motivates people to actually buy and keep YEL, because you know that it will be for 20 or 30 days, and then there will be another vote whether this enhanced pool should be extended or not. So all your community members would basically say, okay, I'm anyways gonna vote in 30 days, so I'll better just join the farming and staking rather than just selling now and buying later for a higher price probably, and not gonna risk that, right? And especially for young projects who seek liquidity, this is super motivatable, because these guys are paying their own tokens for the liquidity provision, and here there is a chance basically that their users will be getting something else just for the same investment. So they're boosting their return on investment like hugely. And put it this way, I mean, just imagine that any project who just launched can join Pancake swap, right, and join the boosted farm where people will be receiving project tokens plus cakes on top. I mean, imagine how, like, even you have to go through the voting, but imagine what kind of boost you're getting. I mean, you'll close your desired liquidity in like 6 to 12 hours probably. So that's something what really motivates projects basically to participate in the governance and create some motivation to actually keep the YEL tokens, while big pools like stablecoins pools that we will be enhancing. I mean, if there is an investor who is farming 7% APR on the stablecoin pool, and through YEL he's farming 15% APR in the stablecoin pool from his millions dollars of investment. I mean, he definitely would be motivated to keep this farm going and like not actually just have it ended and that's it, because he's earning like twice as much as he used to, right? So this kind of guy would probably also keep his tokens to make sure he participates in the voting and extend this farm.
So let me summarize a couple different points you brought up here. So first of all, as a user, you come to YEL, and then actually YEL will send it to the different strategies. So it's not like you're picking one strategy, you're picking the asset, and the asset gets sent to a bunch of different strategies. And then we discussed the YEL token, where we have some sort of incentive to continue to hold YEL because you want to vote continuations of the YEL token, kind of like Curve, where you lock up a certain amount of CRV token and you get a boost to the pool. YEL is kind of similar in that way, where you lock up, maybe you don't lock it necessarily, but you hold on to it and you earn with it. And then when the vote comes around, you're going to want to vote on those particular pools to extend it. Is that about right, what I said?
Yeah, I mean, like, so it's not compulsory to join automated strategies. It's like up to a user basically. So you can choose from any pool on any chain to join the farming pool, right? And on the other hand, I mean, you can just join, not bother yourself with that, and just join the automated farming strategies, or you can join both. You may want to allocate 50% of your portfolio in one single pool and 50% of your investment to the automated strategies. So that's like totally up to user what to use. So yeah, and if you just want to summarize it, I mean, projects are getting jumpstart of their liquidity plus awareness plus marketing, what is cool for them, and they would with pleasure pay the performance fees for such a jumpstart, because the performance fees would be like from 1 to 5% from the allocated rewards. So I mean, that's nothing, like if the rewards are $3,000 per day, what is like $90,000 per month, we would be charging like 4% from that, so it's like 3.5K performance fee. What's nothing comparing to the like regular marketing or any other instruments to gather the liquidity. So that's how we keep the projects happy and help them basically to gather the multi-chain liquidity. Investors are happy because they're getting the opportunity to earn more for the same investment with yield enhanced pools. All of that covered with automated strategies, what generates additional fees, which will be used to fund enhanced pools, and we create additional motivation for people to hold YEL token, because the governance will be able to decide which pools should be enhanced and which not. That's not the only thing that the governance will be deciding, but that's one of the core economical elements, I would say. So
One
yeah,
thing,
that's kind of
one
a
thing
loop.
that sorry, one thing that this just brings to mind is like something like harvest finance, because harvest kind of does what you're describing YEL does without being explicit about it, without saying, this is what we're aiming to do. Because they have a very similar mechanism where they're giving tokens on top of other farms or other projects, and it would be beneficial for people who have those tokens to stake in harvest, because they're just going to get the additional boost. And in the same way, if they have the harvest token or the farm token, then they can also maybe have some sort of say over what's going on within the governance. Do you see that parallel?
Yeah, I do see that parallel. However, Harvest is focusing more on like large pools incentivization rather than like helping small projects to actually jumpstart their liquidity. And there is a like similar aspects for it, but it's different business model overall, because we want to be kind of a Yearn of farming, basically, where at some point people will just enter YEL finance, join automated farming strategies, just just specify their desired risk level and enjoy the profits. That's basically it. So that's something that what is that's my vision of the platform in like 4 to 6 months, basically.
And I can kind of jump in here as like as many of you know that as a community manager for Harvest, I don't see this as from like my perspective, this isn't a competition between, it's not a competing. In fact, I mean, there could be synergies for like a collaboration there. So I think that what Pool is trying to say is that the focus for YEL is more of like an IDO and bringing eyes to these young and promising platforms that may not otherwise have a chance to get as many eyes on them. And Harvest is more of like a focused on yield aggregation at this point. So I think there's some distinct differences there, but we kind of have the same goal in mind. Is to build a strong community and to broaden awareness for what we're doing for these projects, and to like bring it to other projects for more collaborations, and just help bring a broader community into DeFi in general.
Yeah, I definitely understand the distinction, because Harvest doesn't necessarily care about bringing eyes to a particular project, especially a new project. They're more customer facing, meaning that they want to be able to provide a yield aggregation for a very popular pool. So rather than trying to bring attention to a small pool, Harvest is trying to bring a service to their DeFi clients, essentially.
So there, just to like make a clear distinguishment between there. I mean, we are focusing on the actual yield enhancement and maximizing the return on the investment, whether Harvest is more kind of yield aggregation platform, which is like it's not good or bad, we're just a little different in that. So we just, yeah, as I said, we more kind of aiming to become like Yearn of farming rather than like Harvest. And just like Poopster said it really accurately, but we don't actually consider Harvest Finance as our competitors, and we are in a very good point of communication with them on our potential for partnership in some points. And they're not our enemy, but more our friends, I would say.
Right. Like there's sorry. I was
Oh,
just gonna say that there's that we're more like of you would say friendly. It's not a competition. And to just kind of piggyback on what Pool's saying, yeah, there's I think that there's opportunities for us to work together there, and that'll be something that, like Pool said, he'll bring more to the community about moving forward.
thanks, jumping in there, Poopster. What do you, Pool Day, what do you mean when you say you want to be the Yearn of farming? What does that mean?
I said Yearn of farming. So as I said, I mean, like, we are trying to aggregate all the farming opportunities to find the best possible APRs in different risk levels, and provide with a bunch of strategies for our users and investors, how they can actually participate in those strategies and make it automatic, to not bother investor and user, like searching or evaluating hundreds of different farms and opportunities, and comparing APRs, and comparing the liquidity desk, and comparing the price impact, and comparing, like, all of that. But we'll just love to automate it with pre-made strategies and automated protocol, and the Spectre section itself will be more used as a resource from where we gather and modify those strategies. And that's basically what I mean.
I feel like there may be a tension here between trying to, because on the one hand you say that if you have, the governance token, then you can vote on particular projects. But on the other hand, you want to be able to give a good service to your clients. So if there's a new farm that comes up, and that's a good farm for FTM, that was the example we were using, like, are you going to wait until the governance votes that in, or are you just going to deploy the new strategy?
A good farm, you mean like there is now, let's assume there is now already like completed strategy with like 40 different farming opportunities and farming pools on FTM network, for example, and you're asking if there is a new project with a new farm becomes available and it clearly can fall into our strategy. You're asking whether like this particular farm should be approved by the governance before being added to the strategy, right? Is that what you're asking?
Yeah, from the DAO perspective, how do the new strategies get added on? Is it a vote, or is it just like, okay, this is a good opportunity for the users, so we're going to add this, as a team? Yeah.
Yeah, so I would say that as a team, our analytics will prepare kind of a summary and economical observation of the farm and why it should be added or why it shouldn't be added, and we'll pass it to the DAO. But I personally think that there shouldn't be any problems with that, because the more opportunities we include into the strategies, the more attractive those strategies become, the more investors we can get, the more fees we can earn, the more the more demand for YEL token there will be, hence. And I mean, that's something I'm pretty. We actually we really aim to build a healthy community of not just short-term profit takers, but actually educated believers and people who actually understand the economics and how the protocols would be working. And my personal opinion that such things would pass smoothly, because we wouldn't be throwing like random farms. We understand that we are managing people's money, right? And we have to be pretty accurate with that. But yeah, answering your question, we will deliver the report and the governance will have to vote whether it should be added to the strategy or not.
Gotcha. Kind of going in a different direction here. I'm curious why you choose to be anonymous.
So, as I said earlier, originally, I'm one of the founders of the development company, and we have been operating on this market for a long time, and we don't really want to be associated. In terms of legitimacy, we've passed KYC with 3 different marketing agencies, such as BSC News, DeFi Pools, and some other agency we were working with during our pre-sale. I don't remember their name, to be honest, but we're not afraid to show our identity, but we just don't want to be associated with our past projects, which are quite recognizable. So
I got it. Okay, very good. So I kind of want to open up some questions to listeners here as well. So if anyone in particular would like to ask a question, please raise your hand and I will bring you to the stage. So, wanting to continue on that topic, you mentioned that you've worked on hardware wallets, software wallets, and so is this your first run at a DeFi project, or have you worked on others in the past?
my personal probably is the first run, but our developers have been involved in several DeFi projects that are live now. And we've been outstaffing and outsourcing some services for them, right? And I would say on top of that, like our office overall and our company is way bigger than 16 people. So 16 people is only like the core team that works for YEL Finance, and it's like kind of separated from the general work. And we still have some DeFi clients and some developers dedicated to other projects. So yeah, for my personal experience, that's the first DeFi project that I run. But in terms of our expertise, that's like we already have expertise in DeFi space. And me myself, I'm not a developer originally. I have economical background, and I used to work in the financial sector before. So, however, just like life played its game, and like I ended up as a founder of digital agency, and I just, as I said, got inspired by the opportunities that DeFi bring, and having some background in finance sector, I just see all the interesting opportunities and all models that can be implemented that will actually benefit the community, project, and small and big investors both.
What is most inspiring to you about DeFi?
First of all, that there is no one basically who can take decision about your money. So smart contracts are open source and pretty transparent. So any person basically can go and read the smart contract and what it does and how it works. So there is no, I would say that the key thing that is inspiring is that it's decentralized, and it has to be all transparent. It has to be like fair. It has to be clear. But at the same time, it's not governed or ruled by a single body or entity. So we're not, we're not subject to any legal risks. We're not subject to any one-man decisions, and that's something what is amazing. Also, from technical standpoint, in real life, making, like enhancing a pool, for example, it's like, let's say you have a deposit in Bank of America, and Bank of Sweden, or for example, wants to come and say like, hey guys, we want to enhance your deposits, right? That would be like the process that would take probably 6 months or something. In the DeFi space, that's the process that takes like a week or two, like so. That's, I mean, it's becoming much more dynamic in terms of progress.
Absolutely. Imagine Bank of America and Wells Fargo talking to each other on the back end. Never is going to happen.
Yeah.
While building in DeFi, what have you found is the biggest challenge?
Well, probably, I would say the security is super important, because working with others people money, I mean, means you have kind of responsibility for them, right? And whatever you are building, your contracts have to be like super safe and super secure. And most recent updates in the DeFi sector demonstrated us that even, largest auditing companies like Certic and Backshield also fail. I'm talking about Popsicle Finance right now. I mean, that's like that was huge. I mean, like the $22 million get stolen, right? And these guys had 2 audits from leading auditing companies, and like, I can't blame Popsicle Finance. They did nothing wrong. They introduced some nice opportunities. They got the code done. They got it audited 2 fucking times, and then still someone hacks them. It just shows how dangerous is the space, but in the same time, how interesting this space is. And probably the most challenging thing in the DeFi is actually telling yourself that, like, okay, everything is safe, right? Because you always, like, I always wake up in the night and thinking like, okay, and what if we forget this? And then I check and it's like, no, we didn't forget this. Everything is fine. And I mean, just living with the understanding of the responsibility that you are carrying for, thousands or tens of thousands of people. Probably this is the most challenging thing.
Yeah. So in terms of security, what are you doing in order to maybe get a better sleep at night at the very least?
Yeah, so we have a triple check, not like double check, but like triple check policy in our company. So whenever one developer completes his work and delivers smart contract, it's being checked by another developer and then by another developer, and only after that we send it to the audit. So it's like we're doing like a triple check for the coding practices, and we run a lot of tests. We have a QA tester and a dedicated Solidity developer who only do testings, like they don't do any development, actually just testing. And we also do audits, but like I would say that, like trusting some other company, even if they have like very good background, it still doesn't give you any guarantees. So you have to make sure that you do 110% from your side to make sure everything is safe.
Poopster, you had a question. Okay, Poopster's not there. Oh, there he is. Go ahead.
No, can y'all hear me? I guess it's just maybe my internet's not. Can y'all hear me? Okay.
Yeah, we do.
Yeah, go ahead.
Yeah, no, I was just curious. Like, I know there's been like a lot of DeFi's been in the news a lot lately with with the some senators trying to push this bill through that's going to be very limiting for like basically anybody trying to use cryptocurrency in America. Anyway, I was curious as to how you felt with all of, I guess Uniswap's recent actions of delisting some via their front end and things of that nature, and the YEL team choosing to remain anonymous at this time. Like, how does that affect you as a protocol founder? And like, what are your thoughts on wanting to stay anonymous or, at some point reveal your identity?
So I'm not really worried about Uniswap because we're not working with them. I mean, like we are on SushiSwap for Ethereum network, and referring to like what Uniswap does. So technically, when they remove you from the website, I mean, like you're just removed from the front end. You still can swap through the contract, right? But definitely, they're killing like 95% of the swaps for this particular project. So I can't say that this is a good thing that they're doing now. It's actually I personally think that's wrong decision in the DeFi space. I mean, like you can't really run one of the largest DEXs in the DeFi, what's decentralized finance, and centralizing the power of removing, like single project that you don't like or you think suspicious or something. I mean, like that's not how it should be happening. I mean, there should be like, like at least some DAO voting on that. But in terms of us, like we don't have any liquidity on the Uniswap and probably we won't. And regarding remaining anonymous, so there is pros and cons for actually being public, but put it this way, people know me as a pool day, right? So even if we want to get extra partnership, even if we want to get extra collaborations, even if we want to launch another project after that, like I can still be a pool day, and I was a pool day like for 15 years or 20 years. That's my close friends used to call me like from childhood, and I'm not feeling like stressed or something. As I said, we have passed KYC with several agencies, and I'm currently talking with opportunity to get listed, get added to the Binance Labs and get listed into the Binance exchange. And people there told me that the KYC will be required, and like we're totally fine with that, right? But it's just more about publicity, which I mean, the SushiSwap team has been doing super well for the last year, remaining anonymous, and nothing basically, at some point after 2-3 months of successful operation on DeFi in DeFi space, you get the credibility, and people don't really give a single fuck. Basically, do they know you personally or not? So
Yeah, no, that's a great point. I was just regarding. I was just referring to Uniswap, and I guess with in regards to the fact that they've kind of, I guess some people are saying they kind of bowed down to, to regulators, which is understandable, I guess, if you kind of put yourself in their shoes and whatever regulations they may be looking at. But I guess that's what I was trying to get at is how does the YEL finance team kind of look at are they worried about regulation regarding the token and if that is affecting anonymity? But I think you addressed that really well, so I appreciate you taking that.
Do we have maybe any questions from the listeners?
If anyone in the audience has any questions, please feel free to raise your hand and I'll add you to the stage. Additionally, I want to tell everyone that if you are here in the AMA, then you will be eligible to receive a POAP as part of the Creator DAO and Euro Finance collaboration. Poopster, you have a little more
Yeah, I
info on
forgot.
that?
I do actually have POAPs minted, and I'll figure something out as far as I'll give you a code out shortly here.
Awesome. Pool day, as we move to wrapping up the conversation here. Personally, do you have any favorite content creators, writers, YouTubers, TikTok influencers that you enjoy watching, reading, etc.?
The DHAR and
D-Raj,
yeah,
our main man.
yeah, and I also follow Santiago R. Santos. You know this guy.
Oh yes,
Yeah.
he just left Parafy.
Yeah, well, I mean, like I also read and follow Joe Shane, like Rick Barton, and some like I would say like it's not like I wouldn't call them like influencers or content creators, but more kind of movers of the crypto and DeFi space overall. But yeah,
Builders, the builders.
yeah, the builders. That's right.
The Creator DAO account has a question.
Yeah. Can you hear me?
Go for
Yep.
it.
Cool. So I was just wondering about. So the protocol will take fees, and then it will use those fees to do buybacks. I'm just wondering, is that running now, or is that coming soon, or how's that? What's the timeline on that?
So we are launching a governance model this week. And we already have some incentivization pools live for Deek and XBOO staking, and we're launching our chromosome contract this week for the cross farming opportunity and liquidity pools incentivization also this week. And regarding the jumpstarting the liquidity for the projects, we have already this model live basically, so any project can complete the form on our website, like just message me in Telegram or get contacted with our community moderators, and they will forward the project to me. So this process already started. We also work with Polygon and Phantom Foundation teams, where we have like a shared spreadsheet where Polygon team, for example, adds any new project that has been added or applied for migrating or actually just starting on Polygon ecosystem. And these guys, like the foundations, help us a lot with fulfilling the list of potential pools and partners for Yield Enhancement Labs. So currently we have 12 projects that we're in contact with, and we have already confirmed to be joining our farms for the fees generation, and like 10 are still under due diligence and review process. But yes, this is already live basically, and we are live 10 days just, so things are going pretty quickly, and we put a lot of effort to accelerate them. But yeah, it still takes time. Basically, it's not the matter of a few hours.
I saw Ruler Protocol listed on the site. Do you have a partnership with
Uh, yeah, I mean, like, I wouldn't be, calling this a partnership until we actually go like live with the enhancement and the partnership. But overall, like, answering your question, yes, we have a chat with their lead, with their devs, and we're constantly communicating with them. These guys just migrate, like, basically last week, I think. They migrated to Sushi onsen program. So that's something we have to do some development until we incentivize them. But this is on our list, yes. And yes, we do have communication with them. And like, we're not, we're not enhancing pools, just random pools. We actually contact every project, every entity, and discuss with them the collaboration opportunities because from our perspective, I mean, we would rather build the partnership with smaller pools than just incentivizing some big pools and having absolutely no partnership with them. So yeah, that should be mutually beneficial, and their community should know about this opportunity, and they should understand that. So the whole idea of the pool incentivization is to create demand for YEL token to join the governance, and the partnership being like official and mutually beneficial is important, and that's basically what we focus on.
All right, thank you. Diraj, you had a question? Diraj, are you there? Okay, guess not. Pool Day, what is the next thing that is coming out of YEL Finance in the next couple weeks?
So yeah, as I just mentioned, we are launching the chromosome, the incentivization, within the next couple of days. So it should be for the ruler protocol, and it should be for Mogul stars. This is another project that we have collaboration with. This is expected to be live by Wednesday. And by Friday, we should be launching a governance model where people will actually be able to use their YEL tokens to participate in voting and proposals. Next big things on the roadmap is centrifuge, which is the lottery, and automated farming strategies. And for the automated farming, I'd say that we're talking about 25th, 28th of August, because to fulfill the strategies, we first of all need to fulfill the Spectre section with projects and the farming opportunities.
So just to be clear about, you said Ruler is one of the ones coming up. So if I'm LPing in the Ruler ETH pool, then I'll want to come to YEL and deposit in YEL Finance because I'll get both the Ruler reward and the YEL reward. Is that correct?
Not really, because now in SushiSwap, if you deposit the LPs, you will get Sushi plus Ruler. And if you take these LPs and deposit them through YEL Finance, you will be getting Sushi plus Ruler plus YEL on top.
Got it. Okay. Very cool. All right. From my end, I think that pretty much wraps up all my questions. I'm going to give a couple minutes here if anyone else in the audience would like to ask anything. Otherwise, Pool Day, is there anything you would like to add that we have not touched on?
Well, I can't really think of the such things because we covered pretty much all the majority questions regarding the token economics, our background, our community, our plans, and our partnerships. So I would just say that we actually aim and focus on building an ecosystem that will benefit every user in the DeFi space and create additional investment opportunities and profit maximization while retaining the demand for YEL token and making sure that there is a decent utility and significant value of being a holder of YEL. So this is just like generalizing things.
How would you like the listeners to take action after this conversation?
Join our Discord. Feel free to message me or any team member, ask your questions. Any contribution in terms of like content or shilling or spreading a word about YEL. I mean, that's something would definitely help us. And if you still didn't join, I mean, join our product, join our project, join our community. We have a lot of cool things going on in the community, like NFTs giveaways, and NFTs holders don't only get NFTs, they also get like an access to the secret chat room where we do some where we share some alpha, and they get early access for the development environment, for the staging environment, actually not the development environment, sorry, where they can test all the features, like, and being first basically to see what's coming next. We also have a lot of contests that our community managers are running, and a lot of fun overall in our community. So yeah, become part of us. I mean, we're going a long way, and would love to have a healthy and educated and strong believers with their own opinion that they can share, help us identify our mistakes if there are any, and we're friendly and transparent. So we want to like collectively build something cool and deliver some good value for DeFi ecosystem.